A 50-year mortgage. Does that sound like a smart move, or does it sound like risky business? Stick around. So we've all been hearing the chatter and, of course, reading the headlines over the past few days about the current administration bringing up the idea of a 50-year mortgage. This has been talked about for several years. They're bringing it up again. And of course, we're all wondering, could this be a tool to maybe unlock more home ownership in all of the markets across our country, or is it a trap waiting to cost us more in the long run? Kathryn Newman here. Thanks for joining as we dive into this topic of a 50-year mortgage. And if you find some value in our discussion today, please consider subscribing to this channel. And I've also got a really great free resource for you today that I'm going to tell you about later in the video.
But I want it now!
So firstly, what is a 50-year mortgage? Well, I'm sure you know already. A 50-year mortgage is simply a home loan that is amortized over 50 years instead of the traditional 15 or 20 or 30 years. Now, by spreading payments out over 5 decades, of course, your monthly payment is going to go down, which can seem appealing in high-cost markets like we all have right now. I know we have them here, you have them up north, you have them out west. Now, for example, one analyst said that a 50-year mortgage on, say, a $900,000 home could lower payments by about $850 compared to a 30-year mortgage. Now, that sounds amazing, but total interest paid, of course, would be much higher over the lifetime of the loan. And homeowners would gain equity at a much slower pace. Now, currently, 50-year fixed rate mortgages are not allowed under the qualifying mortgages rules spelled out in our federal law. This means Congress would have to act to make them common and, of course, widely available. They're not available right now. But with home prices rising, people are asking, how can we lower a monthly payment to make homeownership more feasible for more people? That's where the super long 50-year loan enters the conversation.
Let's talk about it. Let's talk about it.
So, what would be the benefits or the pros of a 50-year mortgage loan, and why would someone choose it if it were available? So let's talk about those benefits. Well, of course, number one is a lower monthly payment. Because you're stretching the repayment over more years, your monthly payment is lower than it would be under a 30-year term. It also means you might qualify for more home, or maybe for a community that you wouldn't otherwise be able to afford. This, of course, would work for people that want to live close, maybe to their job. Maybe they want to live in a city center where prices are typically higher anyway. Or perhaps it's going to work for people that want to live in a better school district where home prices are higher. Another benefit would be improved affordability, of course, accessibility. So for first-time homebuyers in a high cost or a rapidly appreciating market, that lower payment might be the difference between renting and buying. Benefit number 3. Well, more budget flexibility. So because your payment is lower, you may have more room in your budget for other priorities. Maybe you're saving for your kids' college fund. Maybe you want to invest elsewhere. And of course, it frees your monthly budget to pay off school debt, maybe any hospital debts that you might have, or maybe you're helping take care of a parent that's aging or a special needs child. Or it also benefits staying in a new construction home while you're waiting for that community to gain an appreciation, as new construction home communities typically do. Number 4 benefit, buying power. By reducing the payment barrier, you might be able to step into a newer community or maybe a larger home, and that might be facilitated, of course, if the monthly payment doesn't blow your budget. So let's say on a 30-year mortgage, you only qualify for a $450,000 house, but On a 50-year mortgage, maybe you qualify for $550,000. So you see, with a 50-year, you have more buying power at the longer term amount. I always wondered, how do those 22-year-olds on HGTV, how do they afford a house in California at 1.2? How are they doing it? Well, so yes, on the surface, a 50-year mortgage looks like an interesting tool in our mortgage option toolbox, and perhaps it really could help more buyers get their foot in the door to home ownership. But let's talk about the downside, what to watch out for, because there are some major trade-offs for the 50-year mortgage. Number one downside, well, of course, much higher total interest costs. But because the term is so long, you, of course, are going to end up paying a lot more in interest over the life of the loan.
Duh.
And we don't even know yet. Is the total interest cost on a 50-year loan going to be dramatically higher? Is it going to be the same as a 30-year? We don't know. We're hoping that they stay the same, but I bet on a 50-year that the interest rate is going to be a lot higher than the 30-year. Now, one article I read estimated that for a 30-year mortgage, you might pay about half the interest of what you'd be paying on a 50-year mortgage term. So let's just compare here. For the sake of argument, let's say that mortgage rates were equal for both loan types. It was the same for a 30-year and the same for a 50-year. A 50-year mortgage would lower mortgage payments by about $250 per month on a $400,000 home. Now let's assume that you put 10% down and that the mortgage rate on both types was 6.25%. The total interest payments over the life of the 50-year loan would amount to just under $817,000 compared to only about $438,000 on the 30-year loan, which is a difference of $378,000. And yes, that amounts to 86% more interest over the life of a loan for a 50-year. Ouch.
Ouch.
Downside number two, well, much slower equity buildup. With a 50-year amortization, early payments are heavily weighted towards, interest. And of course, that means that you build equity very, very slowly. And that means if you plan to sell your home, or maybe you want to upgrade in a few years, you will have much less equity to use towards your next home, or maybe no equity at all. Like, how many years will you need to live in that house until you've gained enough equity or enough appreciation that it makes sense for you to move again? Downside number three, longer-term debt, which could be a retirement risk. Now, think about this clearly. On a 50-year mortgage, you're committing to debt possibly into your 60s, 70s, maybe your 80s, depending on your age now. And that is going to complicate your retirement planning. It's going to be hard for refinancing or any kind of resale strategy that you have. Downside number four, non-qualified loan, fewer options, higher rates. Again, because these don't conform to the standard qualified mortgage rules, and that is from the Consumer Financial Protection Bureau. They set the term right now at only 30 years, and these don't qualify for that. And of course, they might come with higher interest rates like we already discussed. There are fewer lenders probably offering these types of loans. Of course, there's riskier features that might be thrown in, like interest only or balloon payments. Downside number five, affordability illusion. So saving money monthly, of course, is good. But if housing values decline like we're seeing right now across our country, or if you're stuck in a home for many, many, many years, you may end up underwater, of course, behind schedule compared to other buyers that don't have the 50-year mortgage. Downside number six, misalignment with typical housing life cycles. So many people expect to stay in their homes between 5 and 10 years in order to see some appreciation growth. Or maybe they remodel, maybe they move up, maybe they sell, whatever it is they expect to do, because that 50-year mortgage inherently assumes staying put far longer, which of course may not align with your strategy for where you want to be in life later on. So let's pretend there is one. What type of buyers would the 50-year loan fit best? Who would benefit from this loan? Well, obviously those that live in the highest home price markets in our country, like California and Hawaii and Oregon, where they have really high prices. And of course, New York, where you can't buy even a tiny house for under $1 million, or so it seems.
Welcome to my apartment. It is 95 square feet.
It might also work for those of you who have a better guarantee of future income growth, like doctors, maybe lawyers, or really just anyone that has the type of job that grows income consistently and, of course, reliably, which is what's reliable these days. I don't know. This loan might work well for those of you who have a clear knowledge of, an area, what their future price appreciation might be. Maybe because you've looked at maybe a certain city or a certain town and you've seen their growth expectation plan. Maybe there's new companies that are being built there. There's a lot of new job opportunities there. Or maybe you're buying in a tourist area that consistently has higher price points, like, of course, these beach areas that we have around here, maybe popular lakes like up north, or maybe areas in the mountains like Aspen or Vail. A 50-year loan might work really well for those of you, maybe you never want to leave that area because for the past 100 years, it's been the best hometown ever, like those Hallmark movies. But there are historical places in our country where it's just always had really good value, and that's where you want to be. So this might be a loan that works well for you as well. It may also work very well for those of you that are extremely financially disciplined, and that for sure you're going to pay extra payments towards the principal. And of course, you might eventually refinance the loan for a shorter term, or maybe put a lump sum down. Now, what if none of those scenarios fit you or your situation? Then I would really recommend that you keep saving your money, save it up, and then go for a standard 30-year mortgage. So let's talk about the voices that are against the 50-year mortgage. And they're concerned that by opening up the opportunity for more people to qualify at a longer term, that the increase in more buyer demand, which is what it would cause, will put a strain on lower inventory levels, which are inherently known to drive home prices up even higher. And of course, that leaves us with affordability problems like we have right now. These voices are also concerned that the real winners here with the 50-year mortgage are the banks and the lending institutions. And one of them said, quote, "It will ultimately reward the banks and mortgage lenders and home builders while people pay far more in interest over time and die before they ever pay off their home."
You're killing me, Smalls.
Kind of cryptic. What about supporters of the 50-year mortgage idea? Well, supporters feel like the 50-year mortgage is a far better solution than renting a house for 50 years. They also believe it's a great option for those that could otherwise not afford to buy a house, because they say it could certainly be refinanced eventually if there were enough equity, where, of course, refinancing made sense. And again, it also makes sense if people were disciplined enough to pay it off sooner. My opinion, not that anybody cares, but my opinion is that the 50-year mortgage will work for some, and I would not advise it for others. I'd really like to hear your take on that. Please comment below. Do you feel like it should be, make it at least an option for buyers, kind of like we said earlier, another tool in the toolbox? Do you think that should be offered and people can make their own decision. Please leave those comments below. Now, I can see the pros, and of course I can see the cons, and I would hope that the qualifying guidelines for such a product would be very, very stringent to keep people from overextending themselves and, of course, causing more harm than good to their finances and maybe losing the house in the long run. So here's what I recommend. If this becomes an option, use the 50-year mortgage concept as, like I said many times, as one tool in the toolbox. Do not use it as a default. You need to run the numbers. You need to work with your professional agent and your professional lender to compare the 30 versus the 50-year for your specific purchase price, whatever the interest rate is, how long you plan to stay in the house, what's the resale opportunity in that house in the future. You need to prioritize flexibility. Even if you take a 50-year loan, please make sure you build in a strategy to either refinance it into a shorter term when you can, as much as possible, or pay more payments on it, or make extra principal payments when your income increases. Of course, you can do that on a bi-weekly basis, maybe some lump sums. And of course, that helps offset the slow equity build. I also recommend that you're realistic about the resale horizon, and of course, for your retirement plan. Please don't let the lower payment blind you to the higher total cost. So for now, I guess we're all going to wait and see what the powers that be come up with and their help to make the struggling housing market across our country a little better. But if you are in a position to find something now, I really encourage you to find a local real estate professional in your area that knows your local market to help you navigate every option that you currently have. And I have a great national network of seasoned agents. If you're not sure who to call, just let me know and I'd be so happy to send you a few contacts. You can call them, see who you click with, and get their opinion on your situation if you're in a position to do something soon. And if you're in my areas here on the Gulf Coast, or maybe you'd really, really like to be, I would be so honored to be your trusted advisor to guide you through finding your next new home. And hey, if you want to know more about my hometown of Parrish, Florida, this is what I told you I was going to share with you earlier. Be sure to get your free relocation guide in the link below. And of course, that's going to help answer some basic questions that you have about these areas here. So make sure to get your guide. And again, I'd love to invite you to join this YouTube family here and subscribe to this channel and hit that like button if you found some value in this video, because that's going to help alert you when another video is available. I'm putting them out weekly. So if that's you, please make sure you subscribe. I'm Kathryn Newman. Thanks for joining in. Don't forget to leave your comments about the 50-year mortgage below. I'll see you next time.